Most traders lose not because of bad setups, but because they trade at the wrong places and at the wrong times. As we may know, liquidity is what drives the market. So if you don't understand liquidity, that means you are the liquidity. But in this video right here, I'm going to explain to you exactly what to look out for and how to avoid being liquidity. By the end of this video, you're going to see exactly when to enter, where to enter, and exactly how to enter. Make sure you stay tuned and watch the whole video and take notes, because at the end, we're going to go on the live charts and we're going to be executing this exact strategy. Without further ado, let's get straight into this video. First, we're going to go over some key principles. We have what we call buy side liquidity. That's called resting stop losses, where buy orders or above highs where the market targets them to fill sell orders. Basically right here is our buy side liquidity. It's also known as our external range liquidity points. Any buy side liquidity or sell side liquidities are external range liquidity points. Sell side liquidity is resting stop loss sell orders below old lows. The market targets them to fill buy orders. As you can see, after price clears a buy side liquidity, price has to reverse to come and clear sell side liquidity. Both of these are classified as external range liquidity. Liquidity pools form wherever retail traders place their stop losses or breakout orders, either at equal highs, trend line touches, or double tops or double bottom. Let's look at this right here. What can we label this? This is a equal high, also a buy side liquidity, also a external range liquidity. Everything is outside of the range, right? The range is from this old low to this old high. Everything outside of the range is external range liquidity, and everything inside of the range, we call that internal range liquidity lows or internal range liquidity highs. Depending if we were in this downtrend format or if we were in a uptrend format, it would still be internal range liquidity. After price clears internal range liquidity, price has to seek external range liquidity. So if price cleared our buy side liquidity, what's the next point of liquidity? Our sell side liquidity lows. Let's go over the time frames, the liquidity mapping, right? From the 1 hour to the 4 hour. Those are the time frames where I go look for my higher time frame liquidity points, either previous day highs, previous day lows, previous session highs, or previous session lows, or Asian range highs or Asian range lows, or just higher time frame liquidity points that I know price will pull back into, right? We always have to do a top-down analysis. I have plenty videos of top-down analysis. If you click my popular videos, I have a popular video on top-down analysis. Make sure you watch all the top-down analysis videos, right? I see a lot of traders out there. They're trying to catch great entries on the lower time frames, but they're not even doing a top-down analysis. You can't rush the process. You can't rush the process, right? You can't just go in trying to get cash trades and get entries. Well, you go either from the weekly, the daily, or the 1 hour or the 4 hour, depending if you are a scalper or a day trader. Like for me, I'm more of a scalper. So I start on the 4 hour / the 1 hour, and I look for my higher time frame liquidity points, my higher time frame zones, right? In my higher time frame PD arrays that price may pull back into. Then I scale down to the lower time frames. These are my execution confirmation time frames, from the 5 minutes to the 15 minutes time frames. That's where you can scale down. But if you haven't developed a higher time frame bias, no trader need to be on the lower time frames yet, right? Never just rush on the market trying to catch a trade, trying to passive funded, or trying to make some money. Develop a solid framework and repeat it daily. That's how you get better. And then for my micro entries, I go down on the 1 minute or the 3 minutes time frames. If the entry looks clean on the 15 minutes or the 5 minutes, take it on the 15 minute / the 5 minutes. There's no reason to go down on the 1 minute or the 3 minutes to refine it. The 5 minute and the 15 minutes are the best execution confirmation windows. The 5 minutes or the 15 minutes. They are powerful and strong confirmation setup windows. But, right, you should only go down on the 1 minute and the 3 minutes if you are a scalper, or if you just want to refine your entries just a little bit. But if it's clean on the 5 minutes and 15 minutes, don't stress it and don't try to catch that sniper yet, right? Develop a solid framework and get better every day. Mark both sides of the current range. Know where liquidity exists. Before any of this happens, right, you have to mark out all of the points of liquidity. You only know that the reversal will pull back here to then continue lower to this sell side liquidity once you understand that price clears a buy side liquidity and give us a change of character. If price never gave us a buy side liquidity sweep in a change of character, price may have just continued rally higher. All right, so always the first thing you should do before you even start looking for the distribution move, because this right here is already the ending of the move, right? This is the ending of the move. Before price even forms this, right, I'm just gonna like mark this right here. Make sure you mark out your buy side liquidity points, your internal range liquidity lows, your possibly consolidation ranges, right? I have plenty videos of liquidity, right? I'm just gonna go over just the basics and just like so everybody can just, if you want to learn each point of liquidity, I have plenty liquidity videos where I go over the consolidation liquidity, sideways consolidation liquidity. I go over all the type of liquidity, right? Make sure you go on my YouTube and go on the playlist section and go through the lessons. I have lessons on all concepts. Click the oldest possibly, or go on the playlist, right? I try to organize it on the playlist. Go on the playlist, look at the liquidity videos, right? The liquidity videos from the past, they're gonna correlate with this right here, and it's gonna make way more sense. So that's the first thing we have to do. Mark both sides of the current range. Know where liquidity exists. Wait for the sweep. Don't anticipate. Liquidity is often cleared before the true move. Liquidity is first. If you don't understand liquidity, that means you are the liquidity. A lot of traders, right, they are anticipating, like they're trying to catch it early. They're trying to move ahead of the market. You can't move ahead of the market, right? Even me, I'm still in a humble state because I know the market can still humble me, right? The market still humbles me to this day. To this day, I be thinking, like, oh man, I got it, but then boom, I go on a losing week, right? You have to always stay on your P's and Q's when you're trading. Like, you never think you figured it out. Never think there's a holy grail. Never think that you're just better than the market, right? Never go ahead of the market. Stay humble and just always just be patient, right? Wait for the liquidity sweep. Don't anticipate the true move just yet. Liquidity is often cleared before the true move. Price has to clear buy side liquidity before we had this market structure shift. It's this market structure shift that gave us this slight pullback inside of a PD array, this fair value gap, this order block, this breaker, whatever it may be, for us to start this continuation pattern down here, right? But if we didn't have this liquidity sweep, we would never have this continuation lower. After the sweep, we look for displacement, a strong candle that breaks structure decisively. This right here is our displacement, right? I'm gonna go on the charts. I'm gonna go show you a clear displacement of how it may look like. But a displacement just breaks the prior low that went higher to give us this liquidity sweep right here. It may look a lot of different ways. It's never, right? Never get this out of your mind. This is just a schematic, right? A schematic of how it may look like, right? The candlesticks form in a lot of different ways. That's why I tell you guys, after you watch this video, go on your charts and backtest and see this for yourself, because it may look different on your own pair, right? Some people, they trade GERD 30, US 30, NASDAQ, Euro USD, Bitcoin. The strategy works on every market, right? It's just the way of the algorithm. This is not my strategy. This is not nobody else's strategy. This is just the way the algorithm moves. So the algorithm is a code. Trading, like the candlesticks, all of it is a code that's programmed, and we're just learning how to like move and flow with the code, if that makes sense, right? So if we understand how the code move, the code has to clear liquidity, right? The algorithm has to clear a point of liquidity before giving us a displacement that breaks structure, right? You learning and moving with the code. If the code hasn't cleared liquidity yet, why are you going ahead of the code, right? The code is creating the candles as we go. So every new hour, we have a new candle. So that's why it's like it's patience, right? You have to sit on your hands. That's why we have the phrases sit on your hands. Sit on your hands, just basically just sitting still, waiting for it to form. And once it's formed, and once you train your eyes through a lot of charts, right? I've backtested thousands of charts. I be seeing people, they just started learning this and they're telling me they can't see it yet, because you haven't seen it yet. Like you haven't seen it the hundreds of times. Like you literally haven't burned candlesticks in your eyes. Like they say 120 hours what it takes to kind of like master a skill. I've been looking at candlesticks for years. You got to keep that in your head, right? So a lot of people get to work, right? Get to work in backtesting and just training your eyes to see this over and over again, because it's gonna pop up faster. Like now, sometimes I don't use no indicators except for the Asian range. As soon as I open my charts, I can already see structure already. Through all the years, I've just been seeing different types of structure, right? Makes this your journey. Like if you're a person you truly want to learn trading, make trading your journey and your self-development journey. It's not going to be a one-day progress, 3 months, 6 months, right? Like it's kind of tiring when I keep hearing people telling me like I've been like I started doing this 2 months, like 3 months. Like it's not you. Nothing in life pays you that fast, right? If you want to get paid that fast, go get a job. I did. My brother did. Plenty of people did, right? Trading is a skill, a lifelong skill that you keep getting better at every day. So don't rush trading. Don't push it. I kind of realized I was hiding this right here. So if anybody missed this right here, just take a screenshot of it. Now let's go over the kill zones in the delivery windows, right? Time is the final confirmation. If time is not aligned properly, I simply just don't take the trades, right? During the kill zones is where the correct delivery happens. Let's go right here. Timing the entries, kill zones in optimal hours, right? Let's go over the session model, the time algorithm. Like I stated, we're trading in algorithm. The Asian session is from 4 p.m. to 12 a.m. Eastern Standard Time. This is our range formation / liquidity buildup. As you can see right here, this is what we call the Asian session. Liquidity is being built above and below the range. The London session is from 1 a.m. to 7 a.m. This is our liquidity sweep and our displacement. As you can see, the London session then, it can either do both, right? I've seen the London session do a lot of different ways, right? It's never linear, like I stated before. The London session may open up lower and clear the Asian session lows to then rally higher to clear the Asian session highs. Then we get that liquidity sweep in a reversal lower. This is our displacement. Then during the New York session now, right, is from 8 a.m. to 11 a.m. is our retrace into a fair value gap / continuation or reversal type of model, right? For this right here is already in a continuation model because the London session gave us that reversal. We got that liquidity sweep, change of character, and then during the New York session, price pull back, clear this intra-range high, mitigate a PD array, to then we start to get this continuation pattern lower to clear sell side liquidity lows right here, right? Then right here is the optimal trading window kill zones. Like I stated before, the London open kill zone is from 1 a.m. to 7 a.m. Look for sweeps of Asia highs and lows. The New York AM kill zone is from 8 a.m. to 11 a.m. EST. That's the retracement or continuation setups. Then the New York PM kill zone, right? If we don't get no entries in the morning session, a lot of people, they get weary and they get angry. Be patient, like I stated before, because you can come back during the PM session and you can catch trades from 12:30 p.m. to 4 p.m. Eastern Standard Time. These are where we get the reversals or daily profit taking, right? If you've been holding your trade from the morning session, I would truly recommend you close your trades by 4 p.m., right? If you are trading indices or something like that, right? Or if you're just a day trader, as I am, or if you're just like a lower, or if you're just like a weekly swing trader also, right? But me personally, I kind of close my trades every day and just take my profits. The entry timing tips is that avoid entries during session overlaps with no displacement. This is a high manipulation risk, right? If price like gave you a liquidity sweep but kept playing around, as you can see right here, if price went higher and give you a liquidity sweep, right, of the Asian highs, right, but kept playing around, We never got a displacement lower to break a prior structure. After we see that price ran the lows and the highs of this Asian session, price give us a second liquidity sweep, then displace lower. Is that displacement that changed character, right? Because price was actually in this uptrend, right? This was actually a retest to continue higher. So, but price reject from this and broke this internal range low. This is a displacement. This right here starts the reversal of this downtrend model. Highest probability setups occur within the 15 to 45 minutes of London or New York open, right? That's why we have the London and New York kill zone times, because the best trades happen in the beginning. As soon as the stock market exchange open, that's when the volatility kicks in NASDAQ, right? That's when I get to see the manipulation happen and then position myself to catch that continuation entry. Confirm alignment across time frames. Like I stated before, we have to do a higher time frame bias to then scale down to see our lower time frame entry trigger. You can't scale down to the lower time frames and just think you're gonna see it clearly, right? You have to have a correct directional bias to know exactly price will pull back inside of this 4-hour fair value gap. But we're at this old low right here, so I can zoom in on the 15 minutes and 5 minutes and see a reversal that would pull me back to this 4-hour fair value gap. Right, you see, this is a directional bias. You have the correct point of liquidity or zone that price will pull back into, and you have the correct execution model on the lower time frames to take that reversal to bring you back to that higher time frame zone. But I hope you guys been taking notes. Let's hop on the charts and go over exactly how we're gonna execute. Now that we're on the charts, let's go over exactly how this may look like in price action. Right, just like I stated, this never that clear. Right, it's never just clear where it's just the exact schematic format. It's just the exact schematic format, right? It always looks different on the charts. That's why we have to do the top-down analysis. So for this model right here, make sure you watch all the top-down analysis videos. I've done at least 10, 20 of them. Make sure you watch them just so you can understand how to develop a higher time frame setup, right? But now we're currently on the 30 minutes time frames, right? 30 minutes time frames. The first thing, like I stated, to do is to mark out all your zones, right? Because mainly, me personally, I trade the New York session kill zone. I just released a London sweep strategy last week. Make sure you watch that video. That goes over this right here, right? It goes over the London session and how you can catch a London session trade. But for this video right here, we're mainly gonna go over the continuation, the New York trade, right? New York session kill zone trade. But like I stated, we have to mark out every point of liquidity. We see that price swept these buy side liquidity points. So where was our main range was at, right? Our main range was from this old low. This is our sell side liquidity, and this old high right here. This is our buy side liquidity. So when price extends higher and give us this liquidity sweep and then push down lower, this was our lower time frame displacement. It looks like a just one candlestick, but this is a 30-minute time frame right here. On the lower time frames, this looks even stronger, right? This is a strong displacement lower that broke this internal range low, giving us a new dealing range now from this high to this prior low right here. Because on the 15 minutes, we have a firm body breakup structure right here. When we scale down, you're going to see this just a little bit lower, right? But mainly, we're just understanding exactly what price action is currently doing. You never want to anticipate price. You never just want to, oh, price may just come back down here, filling this order block to then extend higher, right? Imagine how much traders see this right here. See this order block as a clean zone right here, right? Imagine how much traders see this. Oh, we have Asian range right here in a order block near Asian range, so price may come here and just go back higher. If you don't understand proper structure and proper price delivery, all of this right here will always trick you, and you will always end up like getting messed up. Because if you see this right here, after this 15-minute breakup structure, what did price do? Price give us this Asian session range right here. Our Asian session range is a liquidity builder where liquidity is hiding above and below the Asian session. So if price then during the London session rallies higher to clear the Asian session high and mitigate this order block right here, right? We're just gonna grab the bodies, mitigate this order block right here. What is the next thing you can look for, right? No trader is thinking now, ah, man, price may just bounce back here, right? No, right? We have to understand the main big range. price cleared buy side liquidity. Now price has to come in clear internal range liquidity lows until we clear sell side liquidity, right? You have to understand that price goes from liquidity pool to liquidity pool. I'm not saying that these zones may not work, right? You may get a slight pullback with these zones that bring you back, but the overall trend has already changed. Price already came back higher, give us a liquidity sweep, mitigate this 30-minute order block to then give us a 30-minute change of character right here. So the price delivery already changed already, right? We're in this downtrend format, so there's no point into thinking long right now. There's no point at all. The only thing we should be thinking about is to see where price may pull back into before we continue lower. So we see that price left this 30-minute inverse fair value gap. This is going to be our PD array, our zone that we can either take on the 30 minutes time frame, or scale down on the 15 minutes or on the 5 minutes, right? Or like me personally, right, because these zones be too big for me for my stop losses, what I currently do is I wait for price to come back inside of my entry and look for a lower time frame coach, right? That's basically all I do. I wait for price to pull back inside of my entry, and then I look for a 1 minute to 3 minute, right? Like I stated before, you can either catch these trades on the 5 minutes or the 15 minutes or the 30 minutes, right? These are the best confirmation execution time frames, the 5, 15, and 30. But if you want proper refinement, then the 1 minute and the 3 minutes is best, right? So once price come back inside of my zone, I can either scale on the 3 minutes or the 1 minute, catch that liquidity sweep, a lower time frame coach. On a pullback, place my stop loss above this prior high, and I'm target this prior low right here. This is like the lower time frame confirmation entry, right? But let's see how price comes back inside of this zone. We see price comes back, stays inside of this fair value gap right here, right? Let's scale down on the lower time frames and see if we can see a. Now I scale down on the 1 minute time frame. You can either scale down on the 3 minutes or the 1 minute time frame. Like I stated, whichever one is cleanest to you, right? For clean, to me, I just like to see the overall range, right? The overall big picture that's happening, right? I like to see like the candlesticks pattern a little bit. This may look like a lot of candlesticks to some people, but I'm a lower time frame trader, so I love seeing all these candlesticks. So we see that price rallies higher, clear this prior liquidity point, tap inside of this 30-minute inverse fair value gap to then display slower. Now we got a lower time frame change of character. So if you didn't want to take this big entry right here, right, this could have been that next entry. All right, that's why you have to be trading and you have to be active and you wait for this to happen, because you can quickly miss this because you have to market execution this, right? This is not just in a set and forget. The set and forget is this right here. This is the set and forget trade. You can just set it and forget it, either on the 30 minutes, the 15 minutes, or the 5 minutes. Those are the set and forget, and you have a big stop loss and just a big range. If you're a person, you are live trading and you are a active day trader, right? This is where you can scale down on the 30 minute, on the 1 minute to 3 minutes time frames, right? I don't recommend beginners to do this, right? If you haven't mastered the regular entry, you should not be down here, right? I'm gonna be that harsh mentor that has to tell you this, because I still see a lot of people losing. They're complaining. It's you, right? It's you, right? If you haven't mastered the big entry yet, no reason you should be scaling down on the lower time frames, right? You're just gonna keep blowing more money and losing more. I'm trying to prevent you from losing more, right? So train yourself, right? Don't go on the lower time frames yet until you master like the higher time frame setups, right? Because on the higher time frames, it's more structured. It's way more structured, right? Look, like it's only a couple 15-minute candlesticks. But if you go on the 1 minute, look how much candlesticks there is, right? If you don't understand proper structure yet, all of this is gonna kill you on the lower time frames. So price came back. So we see that price come back, give us a liquidity sweep, displace your entry here and your stop loss right at this prior high, right? And where you target at, right? The first take profit is always this entry range low, always right here. This is your first take profit zone. For me personally, this is like my overall trade every day, literally. The first take profit. The next take profit is your the next intraday range lows. You just go from liquidity to liquidity until price clears that final sell side liquidity down here, right? So you can see we got that lower time frame entry. Price came inside of this 30-minute zone right here, but we got that lower time frame sniper. Extend lower until we clear that sell side liquidity. Boom. Right, there's plenty more entries on the lower time frames, right? But I have videos going over the confirmation entries and just different entries, so make sure you guys watch those videos on just if you want re-entries, or watch the video on FOMO, right? That was a great video I released last year. If you're a person who's struggling with FOMO, fear of missing out, right? It's called Don't Have Fear of Missing Out, right? Watch the video too, man. Like it's a powerful video where I go over even if you miss this entry or this entry, right? There's entries here, there's plenty entries before price clears that final liquidity, so you don't have to cash that sniper entry, right? There's always re-entries that's gonna give you enough price action to make you a lot of money. But I hope you guys enjoyed this video. This was a long one. Make sure you watch this again and watch the previous videos and tie them together, and just make sure you go on your charts and back test this. Don't just sit back and just binge watch these videos, right? I get comments that's like, is binge watching these videos good? No, right? No, it's when you watch it and then go and applicate. Like that's what we teach in the Spark Trading University. It's like we teach you and then you go do a homework, and then you bring us back the homework and we check the homework, right? Right here, you guys are self-study, right? We put out these videos for you so you can go and self-study. These videos are free on YouTube. They have tons of value, and this is the strategy that we trade. You just have to go and self-study, right? Put in the work yourself. Go on the charts and backtest and take notes and get better. I remember I used to watch YouTube videos to learn how to trade. So if I can do it and look where I got, imagine where you can get to, right? So start believing in yourself and start trusting yourself to take initiative daily. I hope you guys enjoyed this video. I have another video coming out later this week. Make sure you stay tuned for that one. But it's gonna be it. Spektrades